And good afternoon, everybody. I am Michael Filigaro. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 index future on Monday, May 10th, 2021. Well, we certainly got some fairly strong information today from the market in terms of what direction is up next, what move is likely complete, and to what degree that move is complete. So this might be a little bit longer update, but I encourage everybody to follow me through with this one because I'm going to lay out a lot of information that is going to affect the near term, the very short term, our day trading, and also the medium to long term picture. Now, initially, as I left it last night, I was feeling that the market might come back to 42.16, 42.17, hold, and then rally again back up to 42.41 or possibly as high as 4,300. The market did attempt to put in a little bit of a rally today, got back to 42.30, and then just decided, no, not going to happen. And with a combination of the Dow kind of starting to move lower off of its plus 300, that actually was about 35,000 today. The NASDAQ would continue to sell off with fairly strong intensity. And that then, of course, just pulled the NASDAQ right down with it. Excuse me, pulled the S&P right down with it. Forgive me, been a long day. So what does that tell us? It tells me that since it's already exceeded, it crossed over and actually closed, right? This is the Globex session. So the regular session closed below the top of wave one. So that this wave in progress cannot be a fourth wave. It was negated on that break. So that forces me to go take a step back, recount. So I had 1, 2, 3, 4, 5. And that's where I have to leave it because it basically has broken the structure that would let it continue to be a five-wave structure that is subdividing. So in any case, if that indeed completes this sub-minute wave 5, and then the sub-sub, and then the sub, then it's likely completing the minute wave 4. I'm just going to take this up so we can see what it's completing. If indeed this is completing a 5, what's it completing a 5 of? Well, first off, it's completing the 5 of a minute wave, sub-minute wave 5. It's then completing a 5 of the minute 5 waves. And then that completes the 5 of the minor degree. I need to go up again to determine what else is that completing. So let's go up to the daily. If indeed that is completing all of that, then we have to come see it's completing all the minors. What then tells us that it's completing that intermediate third wave? And if that's the case, we are just dropping into, go back down to that hourly, we are just dropping into the start of an intermediate fourth wave correction. And where would that tell us that the market is going to go? Well, we have to go back again. I'm sorry, I keep switching charts, but we have to go out to see where we're going to go. We run the potential that this market is going to drop because the way that the guideline to a corrective wave, a fourth wave, is that it's going to, of 1 degree, it's going to drop into the area of the fourth wave of 1 lesser degree. So under intermediate is minor, and here is that minor fourth wave. So essentially, that's where over the intermediate term, which could be a couple of weeks, could be a month, could be a month and a half. So out there somewhere, this is what we're looking for. If indeed this is the start. Now, go back to my hourly chart. So if I have to put a 5, and then a 5, and then a 5 on top of all of this, then that's what the market is telling us. And if this is the start of an intermediate degree fourth wave, we already know where we believe it's going to come to. So we can begin to look at some Fibonacci numbers coming off to see where we think this may all end up. And the first place I would draw, and this would be for our very short term, I could draw Fibonacci's from this fourth wave. So in other words, there to there, and then the extension up to here. And that's going to get us as if we were comparing this wave to this fourth wave. That's not essentially the best Fibonacci, but it's a good start because it tells us what we likely can expect in this initial wave coming off. And so I'm going to go ahead and put that in, and we're going to see what it looks like, because there's certainly the relationship is not between wave A and the fourth wave of one lesser degree. That's not what I would consider a good match, but I have used it before because there are enough markets that use, or hedge funds and everybody else that use this and this type, because they're just trying to figure out what their intraday levels could be. So that's why we then compare the two. So here we are. Right now, comparing those two, we've already reached 70.5% of that decline. Now, initially, I think that wave A is likely going to get us down here. And that's 4,091. So we're still sitting just below 4,200. And so actually we've got about another 100 points that we could drop before we'd see more of a substantial bounce. There are going to be bounces all the way through. So next, we then need to determine what indeed is this thing counting out as. So I can see 1, 2, and then 1, 2, 3. This is a 4. We've got another 5 to complete the 3, then another 4, and then another 5 to complete this initial 5-wave structure down. So we have to allow that to unfold. Wave 5 can subdivide. Wave 5 of 3 can subdivide. But definitely I'd be looking for an initial move to complete this 3 down below today's low of 4,172. And that was right at the close. And this bounce is totally expected simply because as I left, the trade at the close, I was thinking, 1, 2, 3. I need a 4, and then a 5, and then a 4, and then a 5 to complete the sequence from off that high at 4,237.5. Actually, it's a little bit higher, 38.25. So these numbers would be adjusted ever so slightly. So that would be my initial look. I think that we probably, if we're going to rally, we might rally back up to 41.92 if they really got it going. But I'm not anticipating a lot. This is a small fourth wave. And it may already have reached its level and not just kind of hanging out here. So until the next market opens up, or the sellers move in because it's time to go. But in any case, I would be looking for a new low underneath, maybe at 41.66, 41.65, and then another ABC to the upside, again, likely to come within this area, and then an additional drop. Hopefully that would take us all the way down to 41.47, possibly even lower. And then that's going to complete that first 5-wave sequence and a little bit larger correction, and then we go again. So what we're going to try to determine, how is this fourth wave, this intermediate fourth wave, what structure is it going to present to us? Is wave A going to be 5 waves down, or is it going to be an ABC down? So essentially, we're still looking at what this absolute first one could be. If it's going to be 5, it still leaves open the balance to be of this A wave down to be a B wave rally, a C wave decline. So we've got a ways to go before we're really going to determine what the larger structure is going to look like. But right now, we're counting 5 down, and that'll be followed by 3 up. And then the anticipation or the expectation would be for an additional 5 down before we then are in a position to say, okay, that completes wave A. Now let's go into wave B. Remember, we don't want to count too fast. That can be a problem with people that are using Elliott. They're already counting intermediate waves and et cetera, et cetera. It's like that's counting too fast. This is a larger move. It's going to take some time. So upside is going to be limited, I believe. If it really starts to break to the upside, remember, you trade what's in front of you. If it starts to break above, follow your moving averages. They're again starting to fall into place but the 200 is kind of remaining flat. So it's not participating, at least on the hourly right now, to turning and then allowing these to get in front of it. So we've got the 50, the 20 just getting ready to drop below the 50, with the 4 and the 8 are already heading lower. But, you know, for all intents and purposes, it's not that they're totally in sync, but there's enough sync that it should continue to drop a little bit. And that should be finishing it up. And then the moving averages will catch up with the direction. And if they do all fall in sync like they are in the NASDAQ, then that's really spelling that we're going to start to drop. And we'll be looking for that as well. We have our levels here. We have our levels to the upside. We're going to continue to trade what's in front of us. Use your moving averages to help you. On the upside, if it starts to break above this, breaks above the 200, then it's likely going to go to the 8. And if it breaks above that, then it's likely going to go to the 50. You've got Fibonacci resistance levels here that should provide some resistance, but stronger are going to be the moving averages. On the way down, if it stays below here, we're going to be looking for it to break the Fibonacci levels. The moving averages will catch up. And then you'll be able to play against them and the Fibonacci's together to improve your trading. That's where I'm going to leave it for right now. I wish everybody a very good day trading tomorrow. And the next update will be Tuesday the 11th.